Hello everybody and welcome to Crypto Talk with Brianna and Scott for another episode of All Crypto Talk. Brianna, how you doing today?
I am amazing, Scott. So happy to be here. I've been out of the loop with crypto this week a little bit, so I'm excited to get back into it today. How are
Yeah,
you?
I'm doing good. I'm doing good. Yeah, I've got almost overloaded with so much crypto stuff, and just trying to sort it all out, trying to get my program, my academy, not only the content created and create videos for that, but then also all the marketing to get that ready to go. Hopefully in August, end of August, maybe mid, and then just keeping up with everything and. It's just but that's what I signed up for, and I love it. I love it. My name is J. Scott McMillan, and I have a YouTube channel called Crypto for the Rest of Us, and soon coming out a crypto program called Crypto for the Rest of Us. And I'm a crypto investor and educator, and I just am thrilled to spread the word about crypto. And I haven't even been into it that long, a couple years, but really a year, seriously. And I just took the red pill and just dove down the rabbit hole. And now I'm not only enamored with the space of crypto, but and because I think it can do a lot of good in the world, but I'm really trying to figure out, like, what do we do in this down market when everything is down? Is crypto a place to be? And I'm really trying to come up with some really good answers for that. So I think I got a couple. So we'll see. Maybe we'll talk about a little bit today, but definitely am planning to focus on some areas of crypto that not everybody's focusing on, and I think there's some interesting areas there. So go ahead and introduce yourself, Brianna.
Yes, and just to follow up on your introduction, Scott, I am excited to hear what you have been investigating. I know how far you go into it, and I admire your work on your detective skills. But I am Brianna, and I also have a YouTube channel. My YouTube channel is called Purified People, and within my channel, I speak about the different areas of our lives and how to purify our lives and just kind of remove that control, take responsibility. And I have been invested in crypto. I at first in 2015, just very briefly, with Bitcoin and Ethereum. And then again, I reinvested just over a year ago. And that's when I really started to get honed in. I spent a great deal of time, though, investing a little bit blindly, using my phone, using Coinbase, and not knowing what I was doing. If that sounds familiar, then we have something in common. But it wasn't until I started to see terms that I was not familiar with. So terms like NFTs and DeFi, and I was seeing them more and more. And I just decided that I no longer wanted to be left in the dust. And so I started to seek out information and knowledge, and I found the DeFi Academy. And so that's where I met Scott, was it within the DeFi Academy. So diving into London Real's Academy, I just graduated, but that was about a 5-month process of learning about crypto, DeFi, metaverse, NFTs, and everything in between. And so my channel was launched just over a month ago. And now I'm in collaboration here with Scott. We're on our, I think, week 4 of our crypto talk. And it's been a lot of fun. And we are just really getting started. So I'm happy to be here today.
Well, awesome. Yeah, we're going to talk about some news, and we're just going to offer our ideas, and it's fun because we just each pick out a few different articles that come across our desk or email or whatever that we think is interesting, and it usually has something to do with what we're interested in personally. And you'll see that we have different interests in crypto, different things that really resonate with us, but a lot of things that are the same. And it's funny because we don't talk about which articles we pick, and so I think last episode or one of the episodes we picked the same article, and we're always laughing now, we're going to pick the same articles, and we don't know. We'll see. I wouldn't be surprised if we do, but there's just so much out there, and it just whatever kind of tickles my fancy. I kind of save off and say, okay, well, here's what I want to talk about that. So we'll bring up the news, and then we'll talk about what it means to us, and then inevitably I'm going to go into a rant at some point on something and go down the rabbit hole because I can't help myself. So Brianna says that she likes those, but I don't know. We'll see if she still likes them. For our 10th episode.
They're knowledge-based rants, so I love it. Yes, I love it.
Yeah. Well, I have more time. I have more time than most people do to devote to this, and since now it really is my full time, business. I really devote a lot of time to it, and I love to research, and I love to get into the thick of things. But it's funny because I have I've got a well-rounded sort of background that really leads to this because I have a degree in psychology, so I love personal development. But I worked as an engineer for a telecom company for about 20 years. And then I've been an entrepreneur now for about 10. And so, I got lots of, areas that just keep me interested and busy. So it's a lot of fun. Anyways, okay, so you're up. What you got today?
All right.
That's all right. You don't have to share anything. Let me share. There we go. All right.
Okay. So, just a forewarning, I went with some lighter articles this week, and really what I'm bringing to light in my articles, the market's down, and it may be down for some time, but there's still a lot that's happening. I'm also going to give you a little forewarning and be honest. I pretty much feel like I climbed out of like a cave over the last 2 years, so I didn't even know anything about this underground loop that was going on below Las Vegas. But Elon Musk's Boring Company will now accept payment in Dogecoin for underground rides in Las Vegas. And maybe people have been aware of this. I am new to paying attention to what's going on in the outside world.
I didn't know, Brianna. I didn't know about this either, to tell you the truth. And I do pay attention to it. So I don't know, when I saw this article, or I saw it somewhere, I was sort of like, really? What is this? It doesn't surprise me, but I still don't know about it. So I'm anxious to hear like what this thing is.
Yeah. So, well, first off, so they're going to be accepting Dogecoin. There's a whole underground loop that Elon Musk's company called the Boring Company. It's what they have built underneath Las Vegas. So first off, just a little bit of a history of Dogecoin. Dogecoin was launched as a joke by two engineers in 2013. It was kind of one of those first big meme coins. And Dogecoin's price spiked from less than 1 cent to more than 70 cents back in May of 2021 after Elon Musk promoted it on Twitter. So I believe it's the best performing meme coin. It is the best performing meme coin. It's been hanging on for quite some time, and Elon Musk has been very intertwined with it. And so from here, with this underground loop, customers can now use Dogecoin to ride in Musk's series of underground tunnels in Las Vegas. And the loop is a network of tunnels located under the Las Vegas Convention Center that transports people using Tesla vehicles traveling at high speeds, or the high speeds are the aim. The point of it is for efficiency, to get people around quicker that don't have to wait through traffic, that are moving from location to location, popular locations. And so right now that they're only traveling at 50 miles per hour, and it sounds like the ride is a little bit bumpy, but their aim is to have a smoother and faster, more efficient driverless ride in the future. So rides on the loop are currently free, but the company does plan to charge $1.50 for single rides and then $2.50 for a day pass. Not bad at all.
No.
And Musk's Boring Company plans to expand. They are planning to expand the tunnels that are currently in Las Vegas, and then along with that, they have just proposed a plan for Miami. And they are already in the works at doing this in Texas. So
wow,
that's what's happening underground.
You know, that makes it so boring. So when I first saw it, I thought boring, like, oh, that's so boring. But it's probably boring, like bore a tunnel, right? And I don't know. Boring company sounds really funny, but when you think about it, he's building tunnels. So what do you think? It's
Hmm.
bore, like bore.
Yeah, yeah. And I've never heard of the Boring Company.
You know,
But like I said, I've been kind of out of I'm not a huge media and always knowing what's going on, but it's really hard to ignore what Elon Musk is doing. I'm starting to pay a lot more attention.
well, what do you
Um,
think of what do you think of meme coins, and Shiba? And come on, fess up. You had Shiba, didn't you?
I had Shiba. I did.
I knew it. I knew it.
And I'll be honest, it was before I knew what was this was when I was investing and not knowing what anything meant. So to me it was kind of all the same. And there was a lot of hype around Shiba when it came out. That was last fall, I believe. And or at least when it was hypey. And I got into it during the hype period. Probably the worst time to get into it is when I got into it. That was my kind of pattern. Dogecoin, I have not been invested in because by the time I just decided I wasn't going to do meme coins. And that was during my time in the academy, the DeFi academy. And Dogecoin, I don't know. I'm on the fence. What are your thoughts on meme coins?
Yeah. So I am kind of on the fence too. I mean, leaning towards like no, uh, but because I at first I was like, oh, this is giving crypto a bad name, and I'm not saying that it fully is now, but that's what I thought early on, because I'm like, there's no value to these things. There's no value. What? Well, I shouldn't say value because value is in the eye of the beholder, and if people are in, to the joke or whatever, and they want to spend their money on that, fine. And as supply and demand goes in a market, price rose. I get that. Um, but what's the utility? What does it really do? And some people that aren't that familiar with crypto, they kind of think the whole crypto space is like that. That it's just they don't get it. They're like, there's no utility. That there's these coins. There's no business behind it, and that's the danger that I see is that with meme coins, for the most part, at least when they began, there was no utility. It was kind of a joke. But here's the interesting thing. What I do find interesting is that as these meme coins and really Shiba and Doge and I guess there's others, but those two, as they got a lot of users and a lot of people bought them and the price went up and there was the FOMO and Elon Musk comes in and frankly I don't even know what his motive was other than he wanted to get on the joke knowing that he could pull people in, and it did, and it still does. Um, but I think the cool thing now is now that they've got a lot of people in there. Now they're thinking about and they're adding utility on top of it now. So it's interesting because now they're creating DAOs where some of this money can then go to projects that go to improve the world, and they're coming out with products and services now. So it was kind of a backwards way into having utility. They started with nothing, created a user base, and now they're creating real life products and services. And so that's kind of cool. So I can't completely knock it because who's to say that there's a right way to do this? In the end, if they end up creating awesome products and services that really do have value and they end up doing good in the world, then yay. So that's kind of my view on that. But generally, it's funny. I was I was getting my haircut the other day, and I was just talking about this, crypto, and I always like to bring it up in random places because I'm just curious to find out, who's into crypto and who isn't, and how they are, or whatever. And I say just about every time, everybody's interested in it to a certain degree. They're like, oh wow, okay, and they either know a little bit about it or they don't know anything, and they're like, oh, that's interesting. I want to know more. But this girl said, oh yeah, my boyfriend's into that. Kind of with like oh yeah, he's into that kind of stuff or whatever. And I think I asked her or she offered that he was into Shiba or whatever. And I just went, boo. Or she's like, what
Yeah.
do you mean? And I'm like, well, I'm not a big fan. She's like, oh, really? Tell me so I can tell him. I'm like, well, I don't want to, bash it. I'm just saying I'm not a fan of that. I like Bitcoin. I'm kind of old and boring. It's kind of more stable. And then I kind of left it at that. But yeah, there's my rant on Elon and Shiba.
Yeah, I'm right there. You nailed it for me too. Leave it to the life coach to tell me exactly what I'm thinking, because that's been my outlook on it as well. If it's providing value, that's the whole point of what it wasn't at first. I'm being completely honest. When I first got in, I thought that I was doing this just to make money and invest, almost like gambling is what I thought. And then I started to realize there was more to it. And every other area of my life, I'm trying to contribute value to my life. And I want to keep it in that purified sense and not have wasteful things. And so that's kind of what I was relating to meme coins too, is just, I've gone back and forth, but the fact, I like how you pointed out that now Dogecoin is providing some value. A lot of people got rich off of it. That's for sure. A lot of
That's
people have lost
too,
money off of it.
right? And so again, who am I to say, or anyone to say, that people got rich in a totally legal way, right? Because there are people that got rich in crypto and other places in the world, right, that are illegal, or rug pulls and all that stuff. So again, it's funny. The more we talk about it, I'm like, yeah, you know what? There's really nothing really bad or sinister going on here. It's just kind of an interesting little thing. The other point I want to make, Brianna, is that I think your story is good too, for people, and hopefully people listening to this. There's probably a lot of people that got into crypto the way you did, with just kind of not really knowing and just investing and using it on their phone and just thinking, oh, I'm just gonna make a quick buck or whatever. Maybe not that you were thinking that, but and then you get infected, you get the red pill, and then you get it, and that's the beauty. And I hope, as I'm sure you do too, that's what happens to more and more people. And if we can help people, do that too, that's kind of what we're all about. And I love the contrast, because I just came at it from a very, very sort of rigid sort of, risk profile. I didn't want to risk anything, and I was going to do all this research and figure stuff out, which also you can go overboard. But there is a happy medium between, researching too much and just, not doing anything, and just buying anything when you don't really know about it. The happy medium is in the middle. That's where I really want to take people, and I'm trying to create a product and service that will do that for people. And I don't want to make it too complicated for people, but I also want everyone to understand what they're doing. I really don't want people to get into it, and especially if they're putting money into this and they really know what's going on, and then boom, the market goes down, they lose a bunch of money, and they're really mad or whatever. Well, I don't want to see that happen. And I think all it is just understanding, as you did. You realize, hey, this is interesting. I want to know more about this. I don't want to just be like winging this. And as you learned about it, you're like, oh, I get it. I see. And now not only are you, a big fan of the space and want to use it to purify your life and other people's life, you're spreading the word. You want to bring more people in and kind of use your story and say, hey, here's how I started, honestly, but I've come to this, and here's where I am. So I like your story a lot. So that's good.
Yes, I think a lot of people can relate to this. At least most of the people that I run into are doing it the way that I was doing it for the most part. Every once in a while, I will run into somebody who's put more into it and understands it. And I try to think of what it would be, and hopefully it is this way for so many people who have not discovered this yet, to understand the perspective first, the long-term outlook, the way that we've come to know over time, rather than the opposite way, because it saves a lot, but also just getting, like you said, just getting people to experience it, and experience it with knowing what they're doing in that happy medium. But we could go on for this subject forever. I'll go to my next article. I know we could keep going. Let's see here.
Bye, Elon.
Bye, Elon. We'll see you in about 30 minutes when I open up my phone.
Oh, that's funny.
Okay, so let's see. My next one, and like I said, I kept my stories a little bit light.
Yankees. Yay, baseball. I like baseball.
The Yankees. And I love this picture of this old
Scroll down a
Yankees
little bit more.
picture.
Yeah, scroll down some more. Okay, right there.
There we go. Okay, the New York Yankees starting to pay employees in Bitcoin.
Oh, wow.
Um, yeah, super exciting. So the New York Yankees team has partnered with NYDIG, and I'll explain what that is here in a minute, to enable its employees to be paid in Bitcoin. NYDIG offers a benefits plan which allows employees to choose any portion of their salary to be converted into Bitcoin with no transaction fees. And the Yankees will become the first MLB team to pay its employees in Bitcoin. Organizations like the Yankees who lack the infrastructure to pay a portion of its employees' salary in Bitcoin can partner with third-party service providers to bridge the gap between Bitcoin and traditional finance, which is exactly what the Yankees have done. So NYDIG is a Bitcoin-only financial service firm that offers infrastructure for companies and financial institutions looking to operate within the Bitcoin ecosystem, and will offer its Bitcoin savings plan to the world famous Major League Baseball team, becoming its official Bitcoin payroll platform.
Wow.
And I found that super exciting. I've heard of
Yeah.
many NFL, a couple of NFL players who have asked to receive Bitcoin for their salary as well. But this is, it just goes to show many people are wanting this. They're seeing the value of this, and it's being incorporated. And like you said, the price may be down, but it's not going away anytime soon for anyone who really understands it and understands the value of it. So yeah, I found this. It just made me happy. I needed some happy news this week, so I pulled out
Absolutely.
this little light article, and it's just the stuff that we don't see in the mainstream. We kind of have to dig for those happy news articles. So
Right.
I pointed out two happy ones this week.
Yeah, no, that's really cool. I love that. And of course, leave it to the Yankees. They're like probably the most well-known team, and certainly in baseball. And I love it that they have this iconic picture of the old Yankee team, which is kind of cool. I wonder what these guys would have ever thought about Bitcoin and digital. They're like, what? No, I mean that's funny. I just thought of that. What they would think about being paid in Bitcoin.
Right. I was thinking the same thing. I had the same question in my mind.
Yeah, that's funny. Yeah, no, I love that. I love that. And then the other cool thing was, yeah, the NYDIG or whatever, a company that is going to do this now for anyone, for any company that wants to pay their employees in Bitcoin, right?
Hmm. Hmm.
Yeah.
Which is really
So
cool.
yeah, it is, and because companies are starting to do this now uh, and adopt different ways. But how cool it is, yeah, for one of the most iconic sports franchise to be able to lead the way, which is just going to bring in more people into the space. So, yay, good article.
Yes. And so I'm excited to see what you have today.
Okay, let's see. Go back here. All right, so let me find. All right, here we go. Let's see. So, first article today. Let me see. Let's get this bigger. There we go. Does that work? Okay. Okay. So this is okay. So this is stablecoins. It's about stablecoins, but really, what this one's about. Actually, this will be a good contrast because mine are a little heavy this week, and I'm glad yours were lighter. Although I do have one final one that should be kind of fun. But this is about regulation, and I'm always kind of on the lookout for regulation to see where it's going. I think it's important. I think we've had discussions about this before, where we both think that it's important to stay on top of it. We know it's coming. We're hoping that it doesn't crush the spirit of what crypto is. So I'm going to read a little bit here, and then we'll talk about it. So it says regulators are getting ready to do something about the so-called stablecoins. So, driving the news. Yesterday, the Financial Stability Board promised recommendations for coordinating global rules for the asset class come October. Last week, the U.S. Treasury released a fact sheet on a framework agency staff wrote for President Biden's on his behest on coordinating crypto regulations, and all of which following June guidance from the New York Department of Financial Services on how to properly issue stablecoin in June legislation in the European Union. So what I got out of that was, oh my gosh, so this is interesting. There's these three separate governmental regulatory type, agencies that are all looking to crypto. And I don't know if they're kind of doing their own thing. Hopefully they're coordinated a little bit, but it just shows that wow, crypto it's coming, and we all know in the crypto space the regulation is coming, and it's coming hard and fast now. And a lot of it's going to start with the stable coins. And so this article, as we go on, we'll kind of talk about some of that, which I find really interesting. It says, so stablecoins are currently the focus of regulatory efforts, though they all make noises about the entire crypto market. Why it matters is Bitcoin started as a peer-to-peer system, peer-to-peer cash system, but so far it hasn't worked out that way, and retailers, it says that hasn't worked out at the checkout counter because retailers can't know what it will be worth from one day to the next, and that's pretty clear. Bitcoin, crypto started, from the belief and hoping that we could have a brand new digital cash system that would replace our current money system. That was sort of the theory and the idea. And as we know, in the crypto space, it really hasn't worked out that way. But what Bitcoin has become is a store of value, like digital gold. And so as the creator wanted it to become our method of currency in exchanging, to go buy a pizza or a Coke or something, it just isn't that way, and it can't be because the price is still so volatile. If it's going up and down, how can a retailer really know if he can accept that, or whatever, if it's going to swing the value between whatever and whatever. It's just too volatile right now. So what was created a couple years ago was this concept of a stable coin, which provided that stability within crypto because these stable coins are pegged to the dollar usually. And so there's different methods of doing that, but basically the easiest, simplest one is for every dollar in crypto, it's backed by an actual asset of $1 in banks or vaults or somewhere. And so this provides the stability. So when we read on here a little bit, it says what they're saying is a stablecoin that enters the mainstream of the financial system and is widely used as a means of payment or a store of value in multiple jurisdictions could pose significant risk to the financial stability in the absence of adequate regulation. So that's the interesting thing, is that that's actually true. And I think we all understand that right now we're using stablecoins in the crypto markets that when we want to move money out of a certain coin and maybe park it, instead of going back into fiat, we can leave it in crypto in the stablecoin, knowing and hoping that it just stays there. It's not going to change in value, and then when we want to either use it, we could pull it out if we needed it in our lives and turn it into fiat, or we can move it into another crypto asset. So this is what stablecoins are used for. The other thing it's used for is to then park that asset, the money, in the stablecoin, and then stake it or put it into pools where we can earn yield. So if it's stable, just like if we were to put money in the bank, we would expect it not to lose value, right? We just hope that we're going to earn some interest. Well, what in the crypto world, that's what we're trying to replicate. And because crypto is so new, that it hasn't always been that way, where I got actually burned when I was in a stable coin. I thought I was sitting there earning 20%, and the value of the stable coin went to zero. And so I didn't understand the complexities of this, and had there been some regulations in place, that probably wouldn't have happened. But crypto is still new, still very new, and crypto is trying to create value that is like the traditional financial systems, but doesn't have a lot of the problems that the current financial system has. So stablecoins is a really huge issue in crypto, but we do need some regulation, and it's coming. But what's interesting is that we just hope that they don't come in and regulate too much and just shut down, the whole crypto space and just make it an exact copy of what we found in traditional. So we said the Treasury's fact sheet cites that the FSB is one of the major forums through which works to further global regulatory consistency, but there is a tonal difference between the two documents. Our Treasury cites the potential of well-regulated stablecoin arrangements as a point of discussion, but the FSB uses the telling construction of so-called stablecoins 3 times in a 2-page statement about coming recommendations. So the bottom line is that stablecoins and other crypto assets do not operate in a regulation-free space and must adhere to relevant existing requirements of the FSB. So, yeah, so it's coming. There are certain agencies and regulatory, bodies that they're just more aggressive, and so, but then there's some that aren't, and it's just hard to keep it all straight. And the point of this article is that they're all looking into it, and so we just need to be aware of it. And be prepared. So what do you think about that? What do you think about stablecoins and regulation? And have you used stablecoins?
I have. I remember when USDC came out just over a year ago onto Coinbase, and I was wondering, what is this? It didn't make sense to me because I thought, why would there ever be something that just holds its value? It didn't make any sense. Right. And now, and then they became, as I learned through our time in the DeFi Academy, they became my best friend. Moving them in, transferring. I've transferred money overseas or crypto overseas. So I moved it to USDC to be able to do so, and that was seamless. I mean, you just click of a couple buttons, and I move it. I transferred a large portion overseas, and it was there within minutes.
And that's really the key, because if you were to do that through the traditional financial system, especially overseas, that's one of the big things about crypto that it's trying to improve on, because it'll take 3 days, if that, right, to send money overseas.
Absolutely. I actually sent half of my payment in crypto, and half of it wire transfer to the same location. And the wire transfer was the biggest headache, and it took actually multiple days until all the ducks were in a row, and it was just back and forth to the bank. They had to know everything. They had to know where I was sending it, why I'm sending it. It was like a slight interrogation. And I also had warnings along with that as to where I was sending it to our DeFi Academy. And so it was much easier to push a couple of buttons and transfer my Bitcoin into USDC and then send it off within a couple of buttons. So the whole purpose of that, like you were stating while you were reading your notes, is that the market isn't going to affect that amount. So once we switch over into our stablecoin, which is very simple, then it can remain that same price. It won't fluctuate with the market. And then by the time the receiver receives it, it's still that same price. And so you don't have to worry about, like Scott was saying, like you were saying with Bitcoin, that's one of the things why it would be difficult for it to be that main form of currency, because it's so volatile. And so I like stable coins. I'm worried, of course, about the regulations. And I just am crossing my fingers, I guess, and hoping that I don't know. I haven't seen anything saying what type of regulations are going to come in. So that's what I don't know.
Right. And so you can just see that they're all getting their fingers in there, all these different, agencies, which is kind of scary, because, they don't talk to each other as much as they should. So one's going to be yelling one thing, somebody's going to be yelling another thing. You know, our Congress is going to be yelling something. It's going to get pretty sticky, I think. But, you know, we should, I think, in the crypto space, just kind of put that aside, notice what's going on, but not let it get us down, push forward with all the innovation and all the drive and using it as, you know, the best we can, because we know that it's here to stay in some form, and, you know, let's take advantage of what we can at this point. But I'll always say, you know, just go slow, be very careful, back your keys up, back your passwords up, don't invest more than what you really understand, because it is a super volatile market and you can lose a lot of money very quickly. But you can also make money either quickly and a lot more than you can in the traditional finance. So there's still really no better place. And my next article is going to talk about that a little bit. This one or the next one. But so let's see. Let's go back to this one. All right. So a little bit about Bitcoin. So this is a newsletter that I get, and it starts talking about Bitcoin again, and this was actually July 9th when this one came out, and it was saying that Bitcoin rose about 10% last week, and it's just been bouncing up and down, you know, going above 20,000, below 20,000. So I'm not really, you know, I glance at this stuff, but, you know, it's just going to bounce around, in my opinion, for a while longer. But what they're saying here is that they think that, so this particular newsletter says that their outlook is that for the crypto market to consolidate over the next 6 months before shifting into a new boom cycle in 2023. So they think it's going to definitely be a boom cycle, 2023. I've heard that from a few different places. This story says, long story short, over the past 3 weeks, the financial contagion that started with Terra's collapse has rapidly spread across the crypto ecosystem. Celsius halted withdrawals, Babel halted withdrawals, Finblocks, blah, blah, blah. We kind of know that story now. I don't want to beat this dead horse too much because, as Brianna and I were talking, you know, before the call, what we're looking at here, the collapse of it was really these centralized financial banks that are just like traditional banks, but they wanted to play and use crypto assets, which are can be more lucrative. But they weren't fully in the crypto space. They weren't fully decentralized, and therefore we couldn't really see what's going on with how much leverage that they were putting on and who they gave loans to and what they were doing in the backside. Which with completely decentralized DeFi projects and protocols, you can do that. You can find out who's got the money where and if it's over leveraged or what things are going on. And so this is what was happening with these CeFi companies. And so unfortunately, in the broader crypto market, again, people that don't really know that much about crypto, you know, are thinking, oh, crypto is crashing and all these companies are going out of business, and, you know, they put halts on people's money. That happened in a very little area of crypto, in the CeFi. And a lot of times it gets lumped into DeFi, which is completely decentralized, which means that there is no one central organization or entity that controls them. Those are protocols that are run by projects and there are people involved, but those are doing just fine. And they were meant to do that because basically the protocols won't let you over leverage. The software just won't let you do it. Whereas if you've got these traditional banks and so on, you know, a guy makes a phone call, hey, you know, can we get in on this deal? Yeah, sure, we'll let you in. That doesn't happen in DeFi. And by, you know, letting some of these people that should have never been in using these kind of over-leveraged systems in the CeFi, that's why they got into trouble. It always is the story, happened in 2008. The same thing when the traditional financial system got in over its head, and everybody was doing the same thing, and then everybody thought, oh, well, everyone else is doing it, and it all came crashing down. What I believe decentralized, truly decentralized finance will do, because you're locked into the software that says you can do this, and if this happens, then this is going to happen. It's a program. And so you can't get over leveraged. And so I think that this is the answer to all that. So again, when we talk about regulation, I hope regulators understand this and that they don't shut it all down because they think it's just like these CeFi companies that went out of business, like Celsius. It's not. So a little bit of a rant there. All right, so this is some of the so what's happening is the whole industry is deleveraging starting with these companies, they've got to unwind all these places where they've lent all this different money and they can pay back so much. And so a lot of these companies are either bankrupt, but people are still trying to get their money out of it. And so they're just deleveraging it slowly. It says, so among this deleveraging, and by the way, it's happening in the traditional financial world right now too. All the markets are down. So it's happening all over the place, not just in crypto, but everywhere. So all these are deleveraging. Financial stocks took a big hit. And we all know, so the NASDAQ has been down, along with crypto and everything else. It says, so here's what I think is interesting. It says, we're getting a similar level of deleveraging in crypto, like I just said, yet we aren't getting the same price action. The crypto markets took a big leg lower after the Terra collapsed, but it's since stabilized, even that the contagion is spread. And that is pretty bullish. And one of the reasons that Bitcoin prices remain resilient over the past 3 weeks, despite this mass deleveraging, is that Bitcoin is uniquely undervalued today. So my comment there is, the stock markets and all the markets are down, but they're actually down lower than crypto's come down. Crypto's come down from a crazy 60,000, down into its current $20,000 range. And I don't have the percentage off me, but the stock markets and the markets have fallen much lower. So everybody thought, oh, we're having these CeFi companies crash in the crypto market, and this is going to bring down all of crypto, and Bitcoin's going to go down to zero. Well, it hasn't, and I don't think it's ever going to. It's got some stability in there, and part of it, like what they're saying here, it's undervalued. It's like at 20,000, it's undervalued. Really, it should be a lot more worth much more than that, based on markets. But everything is down, and so unfortunately, crypto is still tied to the other markets and the whole economy as a whole, when it really shouldn't be. Crypto really should be much, much higher. But we're all, kind of being drugged down by, really inflation and the Fed printing a ton of money, and the economy, taking a hit. But really, what they're saying is the value of crypto is higher. And eventually this hopefully will get shooken out, and we'll see that the economy can go bad, and crypto can be a place where it can be a hedge. Unfortunately, it's not that way now. When I got into crypto, I actually got into crypto, one of the main reasons was like, this is a place to go to hedge against inflation and to hedge against the economies going lower, because you could see the writing on the wall that with all that Fed printing to get us out of the pandemic, and what they've done ever since really 2008 in printing money, boosting up the economies, which I'm not saying they shouldn't have done, but inflation has to happen. It just has to happen, and it's happening now. It's at 9.1%, the fastest and the highest inflation we've had in over 4 years. We're all taking a hit, and all countries are, but here in the U.S. we're certainly taking a hit, with gas prices and food. And so I thought, oh, well, crypto's the place to go. This is a great story. Everybody jump into crypto. Well, that was the narrative early on with crypto, that would be a place. But I think what's happened in the last couple of years, especially now as we started to see both markets go up and down, is that they're tied together. And unfortunately, it's not a place to hide from inflation necessarily if you're in standard Bitcoin. So here's the whole part about DeFi. So I think that even though I can't say everybody invest in Bitcoin or crypto to hedge against inflation, DeFi still is a place to do that. So this is an area that people hear the word, but I don't think they really understand, really what DeFi is. And these truly decentralized protocols, that their main job, or most of them now, are to park your money like these banks, like a bank, and earn yield. And so you can do this now, and you can earn a lot more interest and yield than you can in a traditional bank. But we still have the volatility, and we're still so new. This is what kind of still worries me, or it's like it's still not a sure bet by anything, because I thought that when my money was in this stablecoin and I parked it in this bank earning 20%, I'm like, look at me, look how smart I am, and everybody else is earning just measly nothing in the regular markets. I'm not betting on a coin going up or down. I'm just letting it sit there and earn interest. And I thought, this is brilliant. This is amazing. I'm going to do this all day long. Well, had that situation been with USDC or USDT or a asset-backed stablecoin, I would have been fine. But it wasn't. It was an algorithmic stablecoin. And it was basing it on an algorithm to keep that stablecoin pegged at $1. And unfortunately, the algorithm went haywire because of the market, of the swings. And as Bitcoin and the main prices were down, just like we're seeing all these CeFi banks not able to cash their loans in and their margin calls, this particular coin that was supposed to be stable, it just went haywire and went down to almost zero. And so yeah, I had coins sitting in a DeFi account that was earning 20%, but it was earning 20% of nothing. So I wasn't making any. It was just, yeah. So it was worthless. I ended up getting probably $50 back out of the deal when they kind of unwound it. But so nothing is really set in stone. So it's still so new that they're still trying to figure out these protocols. But what I'm really trying to push now, and is that I'm really trying to focus on DeFi, not so much on the coins like right now, because when the market's down and everything, other than Bitcoin, I have no faith in any other coin, what it'll do. Now I'm pretty sure that as Bitcoin comes back up, all of them will start to rise up. But when I first got into crypto, my thing was like, okay, I'm going to research and figure out what protocol that has a utility that's going to use blockchain to create some amazing thing for our future. And it's going to change the way we live our life because it's using blockchain technology, and that's the one I want to bet on. And not knowing, I might bet on 10 of them, and if one of them gets to that level and becomes the new Apple or Facebook of the new blockchain, Web3 world, then I'll make a ton of money. And that's still a valid prospect, and a lot of people still do that. I'm just sort of shying away from that because I'm like, I don't know. I don't really know how that's going to work. And I'd rather go into the DeFi space and look at a long-term play where I can feel comfortable that I'm going to be earning somewhere in the order of 10% interest, kind of like I would be in the stock market. But I'm actually going a little further, and I'm trying to find, well, if I put some money in there and I'm pretty stable at 10% over the long run, how can I collapse time and make that happen a little faster, to get to my goals? And so now I'm looking at 20%, 30%, 70% yields that DeFi holds, but I'm not confident about how it all works yet because, it's got to be a long-term play. There are some DeFi protocols that I'm pretty confident will yield 70% over the long run, but the long run is so much could happen between now and in 5 years, and it'll grow so much. So that's what I'm a little leery of, but that's where I'm putting most of my time right now. I'm also investing in Bitcoin because I just think it's going to definitely go back up. And what I'm going to start doing, Brianna, is putting my money into DeFi, earning yields, but also using my Bitcoin, which I haven't done yet, to put it to use, stake it, and earn some interest on it. So really, I'm doing everything in a long-term play, even though that Bitcoin is a separate coin, and I'm holding it for the long run because I think its value will increase. I can also earn yield on that in using Bitcoin in the decentralized world and earn yield on it. So that's my strategy: is yield, yield, yield in crypto. There's my rant.
That was, woo! So many points I took from that. That was wonderful. But I'm just curious. So, what protocols, if you don't mind me asking, do you feel comfortable with? Which DeFi protocols do you have on your radar that you're investigating and that you feel are ones at this time that are the safest bets, if you don't mind me asking?
Well, that's the $100,000 question, or $100,000 Bitcoin, Bitcoin question. And I don't really have a good confident answer yet. I can tell you that I'm in a couple protocols. As I've mentioned before, I am in the Wolf Den ecosystem. They use a couple different tokens. The Guardian token is the main one, and they have a whole ecosystem. So they created a coin, or excuse me, a token. They created a decentralized exchange with partners, and they have a structure and a mechanism that allows you to start off in a liquidity pool where you have half of the guard token and half of a stablecoin like BUSD. They are on the Binance chain, so you have to work on the Binance chain. So, but you can have liquidity in this environment in either guard BUSD. They have another token that's called Night, so you can put liquidity in that, and then you know at that point you start earning yield in compounding yield. So everything I found. Here's an interesting thing that I don't know if you knew it. I just got this really clear actually yesterday in my mind. What's the difference between APR and APY?
So APY is your annual percent yield, so that's how much you'll be making annually. And APY is that annual percent revenue? Is that what APR stands for? No, I'm not sure what APR stands for.
Yeah. So here, and again,
I never noticed. I'm thinking I never even noticed there was a difference.
Well,
I think I've seen them, and then I'm like, oh, I just automatically think they're the same thing.
I know, and they sort of are, and they sort of aren't. Typically, what these yield in DeFi, they'll rate the yield in APR, which is what I used to think was that APY just meant the APR was what you could earn like today. APY is what you earn if you stayed in there for a whole year, average yield per year. It's what I learned. A better definition of that is APY is compounding. APR, there's no compounding. So when you look, like if you look at, and I'll show some screenshots next time, I'll get prepared for this, but like you'll look in these yield pools and you'll see, it'll say APR and it'll give you a number. Sometimes it'll say APY and it's a bigger number. And the difference is that APR, they don't compound. So what this is also very significant. When we go to a bank, they just talk about terms in compounds. Like you're going to be compounded yearly or compounded monthly, and you know I never really thought too much about it. I'm just like, okay, that's part of the deal. Compound interest. I mean, if anyone's ever looked at that basic financial thing like simple interest rate, and then if you compound that over 5 years or a year even, it's significantly different because basically you're taking the interest that you have, putting it into the principal, and now the interest is earning on that principal plus, and it just keeps growing and growing. If you don't do that, if you're just taking the same amount, the interest doesn't change over the year. It just stays the same. So APR is basically what you're going to earn if you just keep your money in there. You'll earn 4%, but it'll always be on that base amount. Now, if you put more into the base amount, yeah, now you're going to earn that same percentage on the base, on a little bit bigger base amount. What compounding is you take the interest that you've just earned and you lump that back into the base account. So if you never put anything in to your base account, so you have $100 and your compounding is basically the interest I earn on that, I'll just put it back in and I have $101. Now the compound interest I earn on that is $101, not $100. So obviously it's more. And so you just keep rolling that interest that you're making every day into the base, and now every day that goes by, it's compounding more and more. So that by the end of a year, it's an exponential growth instead of just a linear, here's the same amount. That's significant because crypto doesn't work that way. It generally is not compounded. And when you look at these APR prices, you're thinking, oh, I'm going to get 4%. And he's like, well, that's okay, but it's not great. Well, if you compound it, which the way I'm learning this in this environment, and in I think a lot of them, you have to actually do something special. Like there's a program that will actually auto compound it for you daily. What I don't know, what I'm going to find out as I'm learning this, is that because I've kind of learned it from the smaller Wolf's Den community, it was better because it kind of allowed you to get in there and really learn from these guys at kind of a basic level. Whereas if you go into the big guys, to the Aave, Uniswap, SushiSwap, and you look at their FAQs and you try to understand it, they speak in techno language, and it's not easy just to figure out like really what's going on here, because they're just a bunch of programmers mostly that are putting out the help guides, and they're not intuitive to figure out. So what I don't really know is how does their compounding work? But I know in some of these others, like with Wolf Den, if you don't put it into a auto compounder, you're just going to get the APR, which is the same. So what the Wolf Den says is that if you take your liquidity pair and you put it in an auto compounder, it'll actually compound twice a day. And so whatever interest you're earning, then that'll come back into the main, and it'll just keep compounding over and over. And so it'll get bigger, and so it's going to grow exponentially. If you add more base liquidity, so if you start with 100, if you continue to add more, and then put another 100 in there, and another 100 in there, again, that's how it grows really big. So if you can commit to putting $500 in here every month into that DeFi protocol that's earning 4%, and you're compounding it, over a year or two, you'll average out to 70% APY. And so,
Okay.
does that make
Would
sense?
that, so if you had that 500, it would be better, would it make a difference if you put it all in at once? Or would you spread it out? If you spread it out, would that make a difference?
I don't think so. That's a good question.
Okay.
That's a question I had. I think either way, it's like you put it in there at the beginning, and now it's going to compound, or you put more in there. Obviously, the best way to do this is to put a chunk in there and find more chunks each month. The example they really use to where you can if you have a 5-year time frame on this, you can take $10,000, put it in there, and then add $1,000 a month, and in 5 years, what they're saying is you should have a couple $1 million because of compounding. It's actually quite mind-boggling just in 5 years. But here's the other thing. The initial asset, the guard token, so the BUSD is a stablecoin, so it's not going to rise in value. But the guard token can rise and drop in value. That also has to get figured into that APR and APY. And it's why it's hard to, you can't calculate this stuff out. You get close, but it's like a lot can happen between now and 5 years. The guard token, if it went way up, you could instantly, have $1 million faster than you thought. But if it goes then way down, it could take you a lot longer. So what I'm finding is that it's hard to really put a finger on it. Hopefully I'll get there someday, but right now I'm comfortable enough saying, okay, I'm going to put some money in here. I'm going to compound it. So I started off with like $800, I think, and I'm going to start putting, maybe $100 a month in there and just kind of watching it, and then looking to see if my APY that's being compounded is getting larger and looking better and better. And so that's one. So the next goal for me is then to look into Uniswap, SushiSwap, which has the same components, but they're like even ahead of the game. They're coming out with new stuff all the time, and to see if it works like that too, which I think it does. I think basically it does, but I think there might be more variables, or there might be less. I don't know, because they're bigger. Now with both of those, that's just one strategy. Then the next couple of strategies, the next one that I'll look into is the lending. So basically, I already have money in that liquidity pool. I now can say, okay, now I want to borrow some more money from that. So you always have to be over leveraged. So if you have $500 in there, you can borrow, say, $250, right? So you get a loan for $250 because you have 500 in there. And now I take that 250 and I put it in something else earning more yield. So now I'm starting to expand this thing and collapse time so that it doesn't take me 5 years, or in 5 years instead of $1 million, I have $2 million. But you have to be really watching this. I don't want it to be too complicated so that the thing gets out of hand and I don't know where everything is. I want it to be simple so that when I get this set up and I've got this and I'm automatically depositing, it's automatically compounding, and then I'm looking at the long run. I can just glance at it, maybe see maybe if I get a bonus somewhere, I could throw another 5,000-10,000 into that pot, or maybe I'll put some of it in Bitcoin. But as long as I'm earning interest, so that's my whole thing. It's like I'm not going to do anything in crypto, at least for now, until the next fun thing happens, that doesn't earn me yield. So because with Bitcoin, it's like, yeah, it's great. I think it will come up, but because I know it's going to go up and down, I want to earn some yield all the time. So that's kind of my new strategy that I really just, in the last month have really been kind of trying to come in. And I didn't start that way. Like you said, I started, I was going to invest in coins, and I was even going to day trade. And I started to learn charting, and I realized that was going to be a little while before I really get comfortable with all the charts. I mean, you can do some stuff in on a short play, but I also don't want to day trade. I don't want to be looking at screens all day long. But so that may be a next step. And of course, I'm always looking like, what can I teach my students? So right now, the work I'm doing is about 2 or 3 steps ahead of what I'm teaching my current students. My current students are just learning basics, like how to use Coinbase, how to buy their first Bitcoin, what is a wallet, how to get, how to move their money into a wallet and be safe. I think I will put them into a very sort of low-key CeFi company called Nexo, which is more DeFi-ish than some of these other ones, but it still is a bank that uses crypto funds. But it seems to be the most stable of the ones. I almost put my students into Anchor, because that's what I was in until it crashed. And I think I mentioned this before, but I'm just thankful that it did before that was my plan. So the lesson for me is there's never a guarantee. There's always more complexity that you probably don't understand. So take more risks and more hedging than you even think you should. That's my philosophy now. And so my students, I'm going to give them the lowest risk thing I can. But the reason we're all here in crypto is because we want to take advantage of the opportunity. And the opportunity is that you can make yields and even coin investments that you can't get anywhere else, as long as you're willing to understand the risks. And for me, that still means being very careful, and going slow. Yeah. So that's about it. I had some other funny ones. I'm going to do one quick thing here, because we rambled on and I ranted, and I was going to time this time, but I didn't get the timer set to see where.
Well, all very interesting, and I have so many questions, and I have so much more to note on that. But I think I'll just save it and combine it and kind of get it together for the next week.
Yeah. Okay, so here's a fun one. In fact, I'll just do a couple and then we'll do some more. This is a cool article on crypto slang, and so I wanted to quiz you and see. Okay, well, this one. So GM, have you heard of that one? You heard people saying GM?
I'll be the worst with slang. GM.
Well, GM.
Okay. So is this just crypto slang?
This is just crypto slang.
Okay, GM. No.
Well,
General Motors.
Good morning, which is like really stupid, but apparently, so I started to hear this in more than one place, like on podcasts and different things, and they're like GM. It's like they're, I'm like, what is that? Like they're saying good morning, like why are they saying that? And the question, I don't know exactly why. Let's see, it says here, the crypto community says GM to each other because everyone is in a global community, and it's nice to say good morning to each other as you start off the day. And of course, most of this stuff starts off in Twitter. It gets blown out into space with Twitter. Twitter community starts off their day with a GM tweet, and then there's GN good night, which I haven't heard as much, but obviously there's a few of those. All right, so I'm gonna save the rest of them because I got a whole bunch more, and we'll do a little quiz, and we'll see.
Okay.
How much crypto slang you know. So be on the alert for crypto slang.
Oh, okay. So we're saving these. That was a little preview, and we're going to save them for next week. Okay.
Yeah.
Okay, good. That's exciting. I like
I'm
this.
Quiz you.
That'll be fun.
So, yeah.
Really fun.
All
well, that was a great talk today, and I am, once again, I'm just super excited for what you're going to continue to learn in DeFi, and I have so many questions and more to add, and kind of a basis, because what you touched on today has to do with what I was looking into on my own over the last couple of days, and really looking into just the past of our economy, our economic structure, our bailouts, our bank bailouts, and really into how our dollar sitting in a bank account is it's devaluing every day. Absolutely.
This is what I tell people. I flat out tell people, I said, if you are not in something earning 9%, you're losing money. and nobody hardly is in anything earning 9% unless they're in crypto. Where can you get 9% in traditional finance? But all of us are losing money if we don't have our money in some vehicle that's earning 9%. That's crazy.
Yes,
So,
and
yeah.
I see it. I see that our dollar, if we really look at it, is unpegged. It's unpegged.
It's unpegged.
And
Okay, that's a really good way to look at it.
and that actually just came to me. But I'm thinking about everything I've collected over this last week, and it's a way. There's so much confusion within it all, and we have inflation, we have interest rates, we have all of these different variables coming in that we've just kind of accepted as what they are. But it's a way to have our dollar stay that name of the dollar, but we're not taking into consideration that, I mean, we see that gas prices are up, we see that everything else is up, but when we just look at our dollar, we're like, oh, our dollar's our dollar. And we just don't even realize we've just come to this time of accepting it all. And
that is so interesting that you've been thinking about that, and I can tell there's going to be a Purified people on this topic.
It is. It will be. Oh yeah, it was
depegging.
Yes, the dollar depegging, absolutely. So
I'll
hone it in, and I'm looking forward to going in more on that. Also, compounding seems to be the term lately, and so on many levels, not only in this but in every area of the personal development world. So
another one. Look, you got all sorts of episodes. I can see a whole compounding issue, and of course, what Brianna does so brilliantly is she connects these concepts to life and about our how we live our lives in more than just crypto and anything else. And so I can see a compounding our life episode. I can see a don't let your life depeg episode. I can see that. Yeah. Can't wait for them.
They'll be coming, and just like your research on your channel, and also want to get more into your course sometime soon, because I think that's going to be something to start pointing out to people that's coming, because that will be exciting, and all of this time that you put in will be able to be brought out to students, and that's super exciting and something to start talking about as well. So
once I get a date here, we'll definitely be talking about that, and finding ways for people to enroll, and just talking it up, and I have a feeling that you're definitely going to be involved in that, definitely somewhere. So it's going to be good.
I would love to be involved. Awesome.
All right.
Wonderful.
All right. Well, thank you again, and we'll wrap this one up, and we will see you all next time on Crypto Talk. And again, if anyone is listening to this and they have a better name, you came up with one called Crypto Scene, right?
Yep, the crypto scene.
The Crypto Scene.
Yep.
We might try that on. If anybody has any other ideas, instead of Crypto Talk. I actually did see I think there's a podcast called Crypto Talks or whatever, which doesn't surprise me. But we're gonna come with Crypto Scene's pretty good. We may try that one on. But anybody got any ideas? Let us know.
Yeah, let us know. That'd be kind of a fun one to run too. A little campaign. What should we name ourselves? So
yeah. All right. So see you next week.
Thank you all.